Hello, welcome. What a week we had. Nifty didn't just rise, it exploded. And now we are knocking on the door of a major resistance, one that Nifty has not been able to breach in two recent attempts, once in February and once in late March. Would third time be the charm? Let's break this down together. Nifty finished the week up 4.5%, closing at 23,851 level. And here is the kicker. That rally happened in just 3 trading sessions. Monday and Friday were both holidays, so this wasn't a slow grind, it was a fast, aggressive move, backed by strong performance of private banks, financial services, and realty stocks. Now, here is where it gets serious. We are looking at the daily chart of Nifty 50. And as you can see, it's exactly back to where it found resistance in last two attempts. The 200-day moving average sits around 24,053 level, and that's your macro level resistance. Long-term trend traders, institutions, they watch this level religiously. And right now, Nifty is just a few points away from testing it for the third time in 3 months. If we break and hold above 200-day moving average, we are not in a relief rally territory anymore. We are talking trend reversal territory. So, would third time be the charm? Now, let's talk sectors. We're looking at the market dashboard on capitaltrends.in. This is a website I use for my research on the Indian stock market. It's free and I highly recommend it. Lots of easily available market insights, lots of patterns. A must-have tool for any serious trader. Coming back to the sectoral performance, we are looking at Nifty sectors and their 1 week performance. It was truly a strong week. Realty, banks, financial services led the way with 5% plus weekly performance. Even Nifty IT managed to close the week on a high note, despite Wipro having a tough day after reporting poor earnings and issuing a revenue guidance for the next quarter. Banks led the way this week, especially ICICI Bank and HDFC Bank. Those who have been watching my coverage of Nifty 50 would know that I had mentioned both HDFC Bank and ICICI Bank as two stocks to watch out for in my video on Sunday, March 23rd. The video title and the link is available in the comments below. Coming back to HDFC and ICICI Bank, both stocks had an excellent week. And both stocks marked a 52-week high. Always a great sign when leaders break out with rising volume. Classic signs of accumulation. Nifty Financial Services Index was up 6% this week. And that's a big deal. It's not just price, it's the leadership. Banking and financial services stocks have been leading the market and showing true leadership. Now, what to watch for next week? Two things. Number one, Nifty is heading straight for the 24,053 level. The 200-day moving average is critical. Until we breach and hold above this, we need to be careful. Number two, and this is the daily chart of Bank Nifty. Let's change to weekly chart to get a better perspective. Look where we have reached. We are right at levels we found resistance in recent months. A level at which market started a correction back in October. So two interesting points to note here. Nifty Bank is back to near its all-time high, showing true leadership and relative strength. And let's look at Nifty 50 chart. See, Nifty 50 is still stuck below its 200-day moving average and far below its recent highs from October last year. So in closing, Nifty 50 is up against one of the most watched moving averages in the market. If we crack 24,053 level with conviction, the tone of this market shifts completely. So a $1 million question is, Can banks and services stocks help Nifty get above its line of resistance, or can they themselves get into some resistance for being near all-time high? What's your view? Are we headed higher, or is this a trap? Let me know your thoughts in the comments. And if you found this helpful, hit like, subscribe, and I'll catch you in next week's market wrap. Until then, trade smart, stay sharp. Bye.